It was a quiet day on Wall Street with the S&P 500 finishing lower by just 0.15%. The Dow Jones was down 0.07%. So that kind of gives you a sense of how quiet the indices were. But the real excitement was within some individual stocks, particularly GameStop. That particular stock has gone on an epic short squeeze here recently. It was up 92% today, and it's up another 40% after hours as Elon Musk has been tweeting about it. And it's a friendly reminder that when you are shorting stocks with no regard, you are going to be taking on what's known as infinite risk. When you're buying a stock, it can only go to zero. If you're shorting a stock, it can continue to go up well more than 100%. So I'm sure those folks that are shorting GameStop right now are starting to feel a little uncomfortable and maybe wish they had a little bit more defined risk, which is what we try to teach a little bit more in these particular presentations. So anyway, interesting price action there. We do have some bigger companies reporting after the bell tonight, with Microsoft in particular up about 4%. So anyway, we'll take a look at all that, see what it means for our posture, and then get into our trade application example where I wanted to focus on a bounce from an energy stock. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 26th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, and make sure you go down to our description area to sign up for our email distribution list. We're also heavy users of Twitter. Feel free to follow me at Brandon Van Zee, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. Last but not least, we do have a presence over on Facebook as well. Feel free to join our group at that web address you see in front of you. All right, let's jump into the activity here today. And as you can see, I've got chart 4B pulled up here in front of us. And as I mentioned in the intro, quiet day. Not a whole lot to discuss from the indices perspective. You can see the S&P 500 was down 0.15% today. The biggest loser on the day was the Russell 2000. We've seen a little bit more wear and tear on the small caps there. It was down 0.62% today. In fact, I was just checking some of my rankings on my factor selector tool, and I won't give away the surprise ahead of time as to who is taking over the number one slot, but I will tell you that those of you that will be joining me tomorrow morning in my factor-based swing trading class, we have a brand new King of the Hill for the first time in over 3 months. Up until this week, it had been small caps leading the way. So we've seen enough kind of loss of momentum here where we're starting to see some other categories starting to take some leadership roles. And it's not that the Russell 2000 is falling apart. It's just that it kind of lost its momentum, right? This upward ascent from November was at a much more rapid pace back here than what we've seen here in the last 2 or 3 weeks, where it's just kind of been more meandering sideways. So don't count them down and out quite yet. It's just that maybe they're taking a little bit of a breather, trying to gather themselves and see where they want to go next. One thing I will point out is that we do have what's known as a bullish intermediate confirmation signal on the Russell 2000. And this one is actually one of our more ideal setups. Now, that doesn't guarantee it's going to be successful, just merely pointing it out here for those of you that are familiar with that trade signal. Basically, what we're doing here is we're using the market forecast technical indicator, which you can find on the Thinkorswim platform or other TD Ameritrade products. And when you hear David and I talking about our generic posture, what we're referencing is this green line on the market forecast technical indicator. That's known as the intermediate line. So think of that as your posture setting mechanism for trend traders. If you're a swing trader, you might be more interested in the blue near-term line. If you're a day trader, you might be more interested in the red momentum line. So for our purposes in our default conversations, when we talk about the posture generically, we're referring to that green line there. So you can see that that's at 91 and falling. Now remember, anything above 80 is in what's known as the upper reversal zone. Let me kind of zoom in here. I'm going to right click and go to maximize sell so that way you guys can see this a little bit better. So this green line is at 91 and falling. Now, normally we don't want to see our lines falling, but in this case, we give it a little bit of a kind of a grace period, a little bit of wiggle room there in that upper reversal zone. As long as it's in that upper reversal zone in the pink, we don't really care if it's rising or falling. We consider it strongly bullish. And you can see an example of why that might be the case. You'll notice over here, the Russell 2000's green line was clearly falling here at the end of December, never did fall out of the upper reversal zone. It stayed in that pink zone the entire time. And of course, you can see that we eventually had a rebound, and the market is much higher at this moment in time. So you didn't want to necessarily go bearish here, knowing what we know in hindsight, that the market actually went up. So that's the reason we have a little bit of that wiggle room up in the upper reversal zone. So this falling portion of it doesn't really affect my mindset all that much. This remains a very strong chart. Price is above a rising moving average. Yes, we've got a little loss of momentum, but it's nothing dramatic at this point. So the first step of identifying whether we have a bullish intermediate confirmation signal is identifying if we have a bullish intermediate posture. And that is the case with the green line in the upper reversal zone. Now, just as a side note, it doesn't really matter in this case, but for those of you that are looking for other types of setups like this, if that green line is going up between 20 and 80, that is also considered bullish. So like over here in November, during this time period, we would not have called it bullish. But when it turned around and started heading back towards that upper reversal zone from basically this point to this point, we would consider that bullish at that point. So the green line either has to be in the upper reversal zone or has to be traveling higher between 20 and 80. The other part of that signal is involving the red momentum line. The red momentum line needs to be in the lower reversal zone. So it's not a situation where it can just simply be falling between the zones like it was back here. It actually has to be in that lower reversal zone for it to be considered a bullish intermediate confirmation signal. And that is the case just barely here. You can see that the momentum line did fall to 19. So anytime you're having a hard time kind of squinting to see, did it actually get into that lower reversal zone there? Remember, this label over here will actually give you the readout if you have access to our charting package here. So with the red line at 19, that qualifies. This is a bullish intermediate confirmation signal. Now, once we've established that, we then try to ask ourselves, is this one of the more ideal setups or one of the less ideal setups? And what we're looking for in that part of the conversation is what's going on with the blue line, first of all. What we like to see is when the blue line is somewhere between 20 and 50. Now, this one barely qualifies under that count, but it does technically, so I'll point it out. The near-term line, as you can see, ended at 49 here. So in other words, it was between 20 and 50. It was on the ultra-high end of that range, but nonetheless, it was there. The idea behind that is we need a healthy enough exhale in order to kind of get behind the idea that this is a buy the dip signal, right? That's effectively what the bullish intermediate confirmation signal is. It's a buy the dip signal. We've had a dip for a couple of days here, which isn't much, but like I mentioned before, the 0.62% pullback we had today was more than we saw with the other indices. So I guess we'll take what we can get. There hasn't been a lot of dips lately in this particular security. And so that is a more ideal setup than what we've seen in other cases. And then the other thing that we might look for is if the red line is too far into the lower reversal zone. Sometimes it goes all the way down to like 5 or below. And sometimes that gives you a heads up that there is going to be a reversal. Doesn't always take place. It's more of, the concept that I mentioned to you guys here last week, which is, you've got rain clouds in the sky. You don't know if it's going to storm or not, but they're there, so you're kind of paying attention to them. So sometimes when that red line gets way too low, closer to 0 down here, it gets to an extreme reading, and it might eventually give way to a further pullback where you wouldn't necessarily want to take advantage of that buy the dip signal. So anyway, kind of an interesting example there of a more idealized version of that bullish intermediate confirmation signal on the Russell 2000. The other indices do not have that signal because the other indices didn't really fall today. They were basically hugging the flat line here today. You can see that in all 4 of our charts cases, we remain with a strongly bullish posture. So again, I think most of us recognize the momentum has kind of fallen by the wayside, but the trend itself is still not called into question, right? That those moving averages there can help guide you if you're not familiar with trying to determine, whether the trend is good or bad or otherwise. Just look at the direction of the 30-day moving average. In this case, all those lines there are painted green, telling us that we got price above a rising moving average. All else being equal, you should assume that that trend will continue and hold until it doesn't. And when it doesn't, we'll eventually be telling you about that in these videos if we start seeing broken support. But right now, we just don't see that. So we have to continue to operate with the mindset that we have a bullish posture. and it's okay to take smaller position sizing if you feel like this move is long in the tooth, which it is, but it doesn't necessarily mean you have to get bearish, right? And there is a difference between that mindset. All right, let's go ahead and take a look now at our 3 green arrows setup, and this will be chart 4D. So we're looking at this. We do have 2 of our charts with a 3 green arrows signal, and those 2 are going to be the charts on the left, the S&P 500 and the NASDAQ composite. Both of those shaded green backgrounds tell us that we've got a so-called 3 green arrows signal, and that's just a colorful way of saying that 3 technical indicators that we care about are showing us bullish signals at this moment in time. We have price above a rising moving average. We have the MACD histogram above the 0 line telling us that we've got decent momentum on the S&P 500 and the NASDAQ, and then the stochastic indicator tells us if prices are closing near the highs of their ranges, which is typically a bullish consideration. Now, the problem with the other 2 charts on the right-hand side, Dow Jones, Russell 2000, is that we have enough of a loss of momentum where we now have red arrows coming in on the MACD histogram. So on those charts, there's a mix of green and red arrows. So of the 4 charts here, it is the S&P 500 and the NASDAQ composite that seem to have a bit more strength than our other areas. And maybe they'll get a little bit of boost from Microsoft in the morning. Remember, Microsoft reported after hours here this evening, and the stock is up quite a bit. Some of you saw me tweeting about that earlier. At the time, it was up 4%. Let's just check in real quick here and see if that's still the case. It might not be up quite 4% right now, but it is still up there close to 4%. You can see that Microsoft ended the session, at 232, and in real time here as I record this, it is up at $240. Now remember, all-time high on Microsoft is 234. Microsoft had kind of been in a lull up until this. So if these gains after hour hold, that will actually be a pretty important day for Microsoft tomorrow as we break out to new highs. And that's one thing that I know my top-down trend trading class will be happy about, in addition to my dividend growth investing class that bought it all those years ago. But in our top-down trend trading class, we actually have a position in it right now that we're actively trend trading. And we've kind of grown a little bit frustrated with it in recent months as it hasn't really gone anywhere, where we've seen so many other stocks plowing their way to the upside. But maybe this will be the giddy up and go that Microsoft needs if it can hold these after hours gains. And remember, Microsoft is such an important component of many indices that it's going to have a pretty big impact on things, right? Microsoft is not only part of the S&P 500, it's part of the Dow Jones Industrial Average, and it's part of the NASDAQ composite. So you might see some benefit from Microsoft being the second largest publicly traded company in elements of all 3 of those charts as soon as tomorrow. So let's keep our eyes on that possibility. All right, let's go ahead and take a look here now at our 1040 crossover method. And as we're looking at this, you can see this is a kind of a longer term view. This is chart 4C for those of you following along at home. And this is a longer term view looking back 3 years over these 4 different equity indices here, and gives you a general sense if the longer term trends are considered bullish or bearish. When the background color of the charts are currently green, as they are in all 4 of these cases, then we have what's known as a longer term bullish trending posture. And what we're using to identify that is what's known as the 1040 crossover method. When we're applying them to these charts, these are 3-year weekly candle charts. So it is the 10-week moving average in orange crossing up and over the 40-week moving average in blue. And as you can see here, for the S&P 500, that occurred back in June. For the NASDAQ, it occurred back in May, and so on and so forth. So it's been several months into this bullish move here. And again, we're not trying to get too cute with this. We're just trying to, ride the waves, so to speak. And there's been a little bit of turbulence here or there. We had a little bit before the election as an example, but the beauty of these charts, because they are less sensitive they're not going to kick you out of a trade because of a little bit of turbulence. You need a little bit more of a consistent shakeup in order for these moving averages to cross back bearishly. So that is kind of the benefit of kind of taking a bird's eye view. If you feel like you've been kind of chewed up in the short term a little bit too much, sometimes expanding your horizon to a longer term view like this could be helpful. All right, let's take a little bit of a step over to the internet. I always like to get a chance to say thank you to all of you that help support this product here on the internet. I'm always shooting for 100 or more likes on Twitter, and you guys came through for me in a big way last time around. 109 of you clicked like for me. I really appreciate that. Again, these videos take a couple of hours out of our day, and we want to make sure that it is being time well spent. And for a lot of you, I know that is the case, but until we actually see a click and like and things like that, we don't know. So that's your way to let us know that you want us to continue to do these videos as often as possible. Also, earlier today, I taught my dividend growth investing class. You're welcome to check that out if you so desire, if you're a plus or a premium member. Remember, that's on our calendar here, so you would just click on our trading rooms tab itself. That brings you to our calendar, and then the dividend growth investing class is this one that's posted here. David's already got his directional option strategies class posted as well. Tomorrow morning, I'll be teaching factor-based swing trading, and David will be teaching options inventory. Now, some of you might have caught in the corner of your eye as I was looking at the market outlook post here a moment ago that over here in our popular recent posts area, there's a new post for the 2021 Dividend Aristocrat list. That was updated over this weekend. Remember, that's an annual rebalancing that takes place there. So as soon as I find that information out, I try to get that out to all of you who follow me. So many of you have seen this already, but if you haven't, feel free to check out that link there on our website. That's one of the things on our website that can be accessed by anybody, even if you're not a paying member of our website. Naturally, a lot of the areas of our website are kind of locked down behind a firewall for our paying members, but some of our areas are open and free for everyone. So feel free to check that out if you're interested in not only the new additions and removals of the Dividend Aristocrat list, but the full list itself will be in this link right here. And if you kind of scroll down a ways, you're going to see a pie chart and those ticker symbols that represent the Dividend Aristocrat list. For those of you that are newer to thinking about that concept, those are just companies that are in the S&P 500 that have raised their dividends for 25 years in a row or more. So it's a very difficult thing for a company to accomplish, and therefore it's noteworthy for those of you that are more income oriented with your longer term investing. So feel free to check that out if you get an opportunity. Also, here on the sector selector, remember I update this on Fridays, you can see that energy is up there at the #1 slot as of Friday. However, energy has fallen in the last couple of days, so in real time these numbers may have slipped. Discretionary is also doing pretty well up there near to the top, and materials, financials, communications, and the like. We have more of the defensive areas kind of down at the bottom of the rankings still. All right, let's get back on over to our Thinkorswim charts, and let's do some 12 grid analysis now, starting with chart 5A. All right, now as this pulls up here for us, a reminder that the background colors of these charts will tell us whether we have a bullish or bearish posture using the market forecast intermediate line. Again, that's focusing on that green line on the market forecast and whether it would be positioned as a bullish or bearish posture. So with the pink backgrounds, those are our bearish postures, and the green backgrounds are going to be our bullish postures here at this moment in time. So let's kind of go through some of this information. As you can see here, the charts on the right-hand side, Bitcoin and also the 10-year U.S. Treasury yield, both of those have light pink backgrounds. In fact, the one above it, preferred stocks, also does, and I could probably throw them into this category, which is these are showing us a little bit of wear and tear in the last couple of weeks, which is why their posture has switched to weekly bearish, but and that's not weekly bearish as in the time period weeks. It's weekly bearish as opposed to strongly bearish, right? These are not strongly bearish charts. These are weekly bearish postures. And the only reason they're weekly bearish postures is because they have sold off here pretty strongly in the last couple of weeks. Preferred stocks, maybe not quite as much. But the point that I wanted to make is when I look at these charts, I still see the 30-day moving average painted green currently, meaning that price continues to be above rising moving averages, and therefore the path of least resistance in my eyes is still to the upside here. So, remember that because there are hundreds of different technical indicators out there, you don't have to work too hard to find conflicting indicators. That's just part of the deal. You're trying to have kind of a more holistic view as to what decisions you're making in the marketplace. And if you're only using one and only one technical indicator, oftentimes you're going to end up being a little bit disappointed by that. So anyway, be aware that the market forecast is suggesting, hey, we've had enough of a sell-off here in recent weeks where the posture's switched just a little bit on those charts, but the trends do remain in place for this moment in time. So be on the lookout for possible bounces here. Bitcoin in particular is kind of one of those speculative asset classes. And if I were to right click on it, go to maximize the chart here, you can kind of see that after we had the topping out here on January 8th, we pulled back quite a bit, but we're still just kind of making a new support level right above that rising moving average right there. And this is a market that's still willing to take on risk. Again, going over here to this GameStop situation that everybody's talking about. GameStop was up 92% today. This is a stock that's up 1,000% in just the 3 months of this chart that we're looking at here. So if you were asking the question, is this a market that's still willing to take on risk? All you have to do is look at this chart, and the answer to that is yes, with the stock trading at basically $210 right now in the after hours session, up another $60 after having gone up already 92% in the normal session. So these are wild times. There are crazy things happening in the market right now, somewhat reminiscent of what we saw back in the dot-com bubble. Many of you, like myself, were trading back then, and some of you recall the Yahoo message boards and the Raging Bull message boards. And now we've got Wall Street Bets and Reddit that are kind of driving price action on stocks like GameStop. So does this have anything to do with fundamentals? Not a whole lot, not to this degree. Now, there might be a little element of fundamentals hidden within that, but fundamentals don't send a stock up 1,000% in 3 months. This is beyond fundamentals. It's beyond technicals, too. It's basically just short covering and games being played behind the scenes there. I saw one tweet after hours here that said that with the after hours move included, GameStop is now worth more than Domino's Pizza. And many of you know that Domino's Pizza has been a spectacular growth stock over the last 10 years. So to have GameStop, a company that was on the verge of bankruptcy just a few months ago, now being worth more than Domino's Pizza, gives you some insight into the craziness of the market that we're all dealing with right now. Anyway, as we look at a few of these other charts over here, you can see that our charts on the top rung are mostly green, and that's a good thing if you're a stock investor. S&P 500 remains strongly bullish. EFA, which represents the developed foreign stocks, remains strongly bullish. And EEM, which represents the emerging foreign stocks, remains strongly bullish. So good stuff right there. We did have the dollar falling a little bit here today, but it's kind of hugging its falling 30-day moving average. So, on that one, keep your eyes on a break in either direction. My bet is still continuing to be to the downside, but, I could easily be wrong on that. If the dollar remains weak, that means that commodities could remain strong in addition to those foreign securities I mentioned up above. Gold does have a weekly bullish posture now, but it's not a great looking chart. They're still trying to figure things out there. Oil's a different story. Oil looks quite good. Very strong chart there with oil. USO is what we're using as our proxy here, but it's up about 30% in the last 3 months, and it's been a nice consistent trend to the upside. So that's an area that I'm still have an interest in from the long side of the market, is those beaten up energy stocks. Now, speaking of which, I'm going to come over here and show you real quick on our chart 1E. This is the sector selector that gets updated daily. I showed you the sector selector, the static image here that I post on Friday evenings, but I wanted to point this out because in this case, energy was number 1 on Friday, but in the 2 days, Monday and then Tuesday, notice that energy has slipped down to the number 3 ranking if this were to be captured on a day-by-day basis on the sector selector. So that means that energy had been quite strong, but we've seen a reasonable pullback here more recently. And to kind of shine some more light upon that concept, I'm going to come back over here to chart 5C, and I'm going to show you the energy chart off and to the right-hand side here. This is XLE. It was down 2% today. It was the worst performer out of our 11 sectors that are out there. Yet when you look at it, you can see it's now at a support area, right? XLE was trading below that 30-day moving average not too long ago, back here at the end of December, and it basically formed a support level, just kind of riding that moving average right there, and eventually got up and off of it and did form a new high. So that is something I'm going to be on the lookout for right now with XLE. Once again, we've kind of rolled over here, but where we're at here after today's push lower is now at a place where I'm curious if we'll be able to establish some support like we were able to do back here. And if that's the case, we might have another pop higher in front of us. Remember, the USO chart looks pretty good, right? That's oil itself. So when oil looks this strong, and you're asking the question, do oil stocks have a chance to bounce? You probably want to bet, yeah, unless you expect a major stock market meltdown, which could happen at any moment for any reason. But otherwise, all else being equal, if the very thing that drives the profit growth of the companies is in a strong upward trend the way that oil itself is, then you can at least kind of build the case that there may be some energy stocks worth paying attention to if you think there's going to be a support bounce. So before we get to our trade application, where I kind of explain my philosophy a little bit further there, I also wanted to make sure we tackle the winners here in the market today from a sector perspective. Our winners were communications. Now remember, this is a story I've been bringing to you the last couple of times in the presentation because of what happened to Netflix. Between this day and this day, Netflix changed the entire course for communications, and communications has continued to sail to new highs ever since that day. In fact, communications has been up 1, 2, 3, 4, 5, 6, 7 straight sessions now, and actually has an overbought cluster signal. That's how quickly it has gone up. So that's been a very nice breakout move there on communications. You also had real estate doing quite well today. Now their chart does not look as good. Notice that real estate would have to go quite a ways to get back to the highs of this candle back in November, whereas communications is breaking to new highs already. But it's at least worth pointing out that real estate has made a pretty sizable move off of its lows from a couple of weeks ago. All right, let's get into our trade application example. And I wanted to focus on that energy sector that I had mentioned before. So let's just pull up chart 3A. And I'm going to pull up ticker symbol FTI. Now, this is one that probably is not a company that all of you are familiar with. So remember, if you're ever curious what sector a stock belongs to on the Thinkorswim platform, you can come up here to your Analyze area and then come down to Fundamentals. And then up here, it'll show you kind of right below the ticker symbol what sector it belongs to. So FTI is categorized as an energy stock. Now, truthfully, I might not have taken this trade had I done the trade after hours, but as most of you know, I do the trade during the market day, so that way it gives those of you that are premium members access to the trade information before everybody who's watching the free video later that night, because I send it out via Telegram. Well, anyway, every so often that burns me. This is one of those cases because by the time that the closing bell rang, my signal actually disappeared on this one. So I might have thought twice about taking the trade altogether. At the time that I took the trade, I actually had a blue background color of our chart here telling us that the blue line was considered bullish at that time. But because it kind of sold off into the close, that bullish near-term posture actually went down into a bearish near-term posture. Now, it doesn't mean that the trade is an awful one. It just means that it's less enticing than it was. As you can see, kind of what I was driving towards when I was looking at this is going back to our conversation about the energy sector. The energy sector itself has pulled back to its own rising 30-day moving average. So I wanted to find an energy stock that kind of fit the bill that could bounce from a similar scenario. And so that's where I was looking at FTI, and earlier in the day, it was kind of giving us this CAHOLD pattern. CAHOLD is an acronym. It stands for close above the high of the low day. Yesterday was the low day, and when I got into the trade, it was above the high of yesterday's candle. But as it closed a little bit lower here, it kind of closed within yesterday's body, so it no longer has that hold setup there. Nonetheless, it is still above a rising 30-day moving average here. And, they do have an earnings announcement coming up, but it's not for another month. So that's not until the end of February there. And I'm just doing a bullish swing trade here. I'm just buying the stock. I'm putting my stop loss down here below $10, and I'm trying to get this stock to bounce up and off of that moving average back to this candle where it was trading back here on January 20th. So that's kind of the basic idea behind it. Again, it's too bad that the posture had to change in the last 5 minutes of the session here today, but that happens, and that's the real life for you as a trader, right? And you just have to kind of deal with it. But what I'm hoping for on this one is that XLE and many of the stocks within XLE, like FTI, will start bouncing higher based upon the concept that they're still above rising moving averages, and oil itself continues to be in a strongly bullish trend. So that's what I had for you here tonight. I hope you got some value out of checking out the video. Again, it wasn't the most exciting market day today, but maybe some of you are blown away as I am by those GameStop charts up 1,000% in 3 months. So if you got any value out of the video tonight, as always, I encourage you to go over to Twitter, click like for us there. That's your way to let David and I know that you'd like to get these videos as often as possible. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.